Every single crypto top ends in exactly the same way. You get insiders selling, you get retail that gets wrecked, and you get a crowd that just isn't positioned properly. The question isn't whether there's going to be a top. Of course there's going to be a top. The question is, can you position before the rest of the crowd does? So in this video, I'm going to be teaching you exactly the market signals that I look for to spot a crypto cycle top and how you can do it as well. Let's get right into it. We're going to start with the contents. The illusion of certainty. On-chain stress indicators. So this is quite nerdy stuff, guys. I hope you guys are ready to get into this. On-chain stress indicators is MVRV ratio, things that you'll find on Glassnode and CryptoQuant. Don't see many people making videos about this, so I'm really excited to share this with you guys. Derivatives and leverage extremes. So we're going to be going through funding rates. We're going to be going through liquidations. A few other indicators that I use to know when the market's overheated and when we're likely going to be approaching the top. Market rotation and risk curve cascade. I'm going to teach you historically what has happened in previous Bitcoin cycles and crypto cycles. How that people, as the cycle goes on, people increase their risk appetite. What you can do to spot this, the indicators that I use to spot this, and the kind of historical patterns that happen every single crypto cycle. Sentiment and media frenzy. We're going to be in detail as to how this shapes a crypto cycle, how you can spot it. And finally, I'm going to tell you how to act, the survival framework. That's the whole main point of this video. Let's get into it. We're going to start with the illusion of certainty, just to kind of really set the scene for you guys. So no single signal. Every single cycle, traders convince themselves there's one perfect metric or chart that will call the top. The truth is that it doesn't exist. Tops only become obvious in hindsight. Consensus is a trap. When everyone agrees, they're all usually wrong. This is what I'm saying about you have to position yourself before the crowd. If everyone thinks a coin is a blue chip, and then it's most likely going to go up 10x, high after already running 100x, it's probably the top. So most people think higher prices confirm their conviction. But in reality, those moves are often insiders selling into demand. So the moment it feels safest to hold is usually when insiders and smart retail start unloading onto the crowd. It's very important for you guys to understand these concepts just before we get more into the nitty-gritty onto how exactly to sell the top. Confluence over singular metrics. So one metric on its own is just noise. This is what most people do. They look at coin-based metrics. They look at like, oh, how many celebrities are launching meme coins in order to try and decide whether they're a cycle top. The reality is a single indicator means nothing without confluence of multiple other indicators, which I'm going to give you. That's why professionals don't just rely on one tool. The edge comes from confluence, different signals aligning together, telling the same story. You also have to learn how to interpret that story, which is a difficult skill, but I'm going to try my best to help you with this. So what's the professional's approach? Well, I don't try and call the exact tick. I don't need to. My edge is in recognizing when enough of these signals turn red. I see warning symbols everywhere at the same time, and that's when I begin to scale out. Okay, by the time the crowd realizes I'm already liquid, I'm prepared for that down move. Professionals understand that it's more important. You don't have to catch the pico top. Just make sure you have enough cash until the next good opportunity. That's what the best traders and investors, that's the mindset they have. You just got to capture the bulk of the move. You don't have to capture all of the move. Okay, guys? So, are you guys ready? Prepare your brains. This bit is a bit more complicated. This honestly took me a little bit of time to get my head around. I mean, I started digging into this years ago, and I have literally looked at so many indicators. There's so much crap out there, guys. These are the main indicators that I have found in my experience give the most honest signals and actually have helped me catch previous tops. We're going to begin with the MVRV ratio. So this compares Bitcoin's price to the price of purchase. Does that make sense? So Bitcoin's current price. Okay, say you have a Bitcoin wallet, a random Bitcoin wallet, and they bought in 2017. What this does, it compares when they bought and the price of Bitcoin that they bought to the current Bitcoin price. So let's say I buy Bitcoin at 10K Bitcoin, so 10,000 US dollars per Bitcoin. Now Bitcoin's at $100,000, say, just theoretically. I'm 10x up. Okay, that's a pretty big ratio. So when this ratio becomes bigger and more people are sitting in more profit because the disparity between the price at which they bought and the price that Bitcoin is now is larger, that's when the MVRV ratio is high, and that's when they're more likely to take profits, right? So that's exactly what this tells you here. So when the MVRV pushes above extreme levels, it means that the majority of holders are in deep profit. At those levels, history shows that people start cashing out. Look, if I bought Bitcoin at $10,000 per Bitcoin and it's now at theoretically $5 million per Bitcoin, obviously I'm going to start cashing out because I'm so far in profit. This is what we found, okay? Obviously, the higher the MVRV, the more likely that people are going to start cashing out, and this is something that you can look at. So if we see here, we got the MVRV score. Hope you can see this clearly, guys. And essentially, a score of 2, I believe, means that people are 2x in profit, roughly. We're looking at the MVRV ratio, okay? So it's a very, very good metric to look at, guys. I recommend you guys go onto CryptoQuant, have a look at that metric. Next one, the SOPR, SOPR, spent output profit ratio. I'll explain it simply as well. So it's similar to the MVRV with a distinct difference. Essentially, it tracks whether coins on chain are being sold at a profit or loss. So basically, it helps you capture euphoric phases in the market. Essentially, if people start moving their tokens around, it quantifies that as them selling. So let's say you have like loads of old Bitcoin wallets that haven't touched their tokens in ages. Let's say these guys bought early in like 2011. And then all of a sudden, we see them start moving money, start sending Bitcoins to Coinbase and Binance. That's a sign that they're probably selling off. So if we see this kind of activity happen, it means that the SOPR would increase. During euphoric phases, SOPR spikes higher and stays elevated. It means that holders are constantly selling coins for larger profits, which is a sign of distribution and an overheated market. Essentially, it tells you when people are moving their coins about and start to sell their Bitcoins. These are on-chain metrics, by the way, guys, okay? The Puell Multiple. This is an underrated one. By the way, guys, we got the SOPR. So this is the A SOPR. It's adjusted. It means that they've just reduced some noise in the data. So it's like SOPR with a bit of reduced noise. Okay, I think they take away short-term holders or something like that. Have a look at it, guys. It's on CryptoQuant. Puell Multiple. This is to do with miner revenue. This essentially, you can see the big drops. The Puell Multiple, it's this in blue here. Okay, so it's this in blue. Now, you can see we had a big decline here. This is because miner revenue got cut in half because of the halvening. So that was in April 2024. But essentially what it looks at miner revenue compared to its yearly average. And essentially when it's running hot, it means that miners are making far more than normal to the yearly average. And they're incentivized to sell into the market. So it's very important to understand that the miners actually make a shit ton of money. They're selling into the market when it's euphoria and it's hot. And that added supply historically is lined up with macro tops. So it's an on-chain signal not enough people talk about. It's very good at timing bottoms of Bitcoin as well. So I'll give you guys a bit more alpha if you're curious. If you want to time a bottom, what you do is you wait till the Puell Multiple is below 0. Below 1, sorry. Historically, when it's been below 1, it's been a really good time to enter. So if they're making significantly less than their yearly average, okay? Reserve risk. So the reserve risk is a complicated formula. I'm not going to show you the formula because there's no need. Essentially, it measures long-term holder conviction and how tempted they are to sell. Slightly different to the MVRV. I know they sound very, very similar, but there is a slight difference. It uses what's called the reserve risks. Like, what's the risk of whales wanting to start taking profits? And essentially what it does, it measures, long-term holder conviction, how tempted they are to sell. So at market tops, conviction weakens. The temptation to realize gains dominates. Reserve risk pushes to extreme heights, showing that even the strongest hands are giving in. So once this starts rising very, very high, it really is the sign of a top. You got CoinGlass here. They have a very good diagram showing the reserve risk. So you can see here, I hope you guys can see this, because should I zoom in a bit more? You can see here that essentially every single time we've had a top, reserve risk has spiked. Okay, We had a spike here in November 2020, that spike too. And then I believe the next stop will likely have a big spike as well. So the common thread, all four of these indicators highlight stress in the cycle, okay? Also, just to point out, all of these indicators are trying to map what other market participants are doing. So like the more macro game in trading and investing, you're trying to understand what other participants are doing, because that's all you're doing. It's just money moving around, right? We're trying to figure out what are the whales doing. The whales dictate when the cycle ends. If they start selling very early, that means the cycle's finishing. So they highlight stress in the system. Profits are maxed, miners are dumping, strong hands are selling. Each indicator on its own is noise. But when they flash together, you know the market's stretched to a breaking point and we're probably near the cycle top. I'll have links for each of these down below, guys, okay? So let's move on. Derivatives and leverage extremes. So funding rates. Funding rates essentially show you how many traders are long in the market. When the funding rates are very high, it means that traders are overwhelmingly bullish on the market. In every cycle, extended periods of very high funding has marked late stage euphoria. So funding rates, here we go. So you got aggregated funding rates, aggregated only because each of the exchanges have their own data on what the funding rates are. So if more people are opening longs on Bitcoin than shorts, funding rates increase. That means that longs have to pay money to shorts. That's a little bit complicated, but that essentially is what it is. So when funding rates go up, it means that more people are long than short. It means that more people are speculating and more upside. If this happens for an extended period of time, it's bearish as fuck. It basically means that the market's super overheated, okay? It's very good to look at. I got the very good metrics in. Open interest, very similar to funding rates, but slightly different. Open interest measures the total size of outstanding futures contracts. It essentially tells you how many trades are open. So higher open interest equals more trades are open equals more market interest, okay? When open interest pushes to record heights during a rally, it's over an extended period of time, I should have added, it signals market is over leveraged. So even a small pullback can trigger a cascade of liquidations. So it's a very, very good metric to look at. I'm going to leave a link down below as well. Have a look at open interest. When it's extended and very high for a long period of time, it means that the market is probably overheating, okay? So the message behind them, well, high funding and high open interest don't mean strength. They mean fragility. They show the market stretched and vulnerable with too much borrowed money chasing the last leg of the cycle. So the way I use it is I don't wait for a liquidation cascade. When funding and open interest are both screening excess, and I have my other metrics, like I said, it's not just one signal, guys. You're not going to sit on this video. We're professionals here, guys, okay? We understand that there's not just one signal that's going to call a market top. Your favorite KOL on Twitter isn't going to call a market top. It's multiple signals layered together, giving us consensus. We're professionals, okay? So once I see these two, maybe I see some MVRV scores, maybe some other technical analysis that I'm doing, I get worried. When funding and open interest are screaming excess, I know people are piling in late. That's when I start reducing my risk and scaling out before the liquidation takes them down, okay? Market rotation and risk cascade. So this is a little bit less nerdy. And you guys have probably heard of this before. So what's the pattern? Well, every single cycle, it follows the same liquidity path. You must have seen this. There's a diagram out there. I probably should have added it. Bitcoin runs first, and then it rotates into ETH. And then from there, it moves into high beta altcoins, and then finally spills into meme coins. Now, that's the pattern. Why does it happen? Well, it happens because people start speculating. They see Bitcoin going up. They say, oh, Bitcoin's running, ETH is going to run next. So they start moving up the risk spectrum, okay? And then after that, they start betting on Solana. And then after Solana, on Sui. And then after Sui, on Sei. And then meme coins, Fartcoin, Titcoin, anything, right? So money moves up the risk spectrum, or down the, you got what I mean, into high risk assets. A Bitcoin dominance. When Bitcoin's share of the market peaks and starts to roll over, it's typically a sign that liquidity is leaving and chasing risk. Exactly what we were saying. Money is flowing up the risk curve, and that shift is one of the clearest signals we're getting late into the cycle. So Bitcoin dominance is excellent. What you'll see in a typical Bitcoin crypto cycle is that near probably like the first 70 to maybe 70% of the market cycle, Bitcoin dominance is just going to go up. Bitcoin's going to be the leader of the rally, and it's just going to go up loads. And then nearer to the end of the cycle, it starts to go down because people start speculating on those other altcoins. Dino coins pumping. When legacy coins like Litecoin and ADA start pumping, this is like, guys, I know some of you love Cardano, so we're going to stick to Litecoin. Litecoin is not a good coin. It's a dino coin. It's got no real reason to pump. Yet for some reason, at the end of every cycle, it pumps. So it means that fresh liquidity has nowhere left to go. It's exhausted and begins to pump the oldest and last coins. So historically, that's one of the most reliable signs of exhaustion in the market. That's what you're going to look for. So what's the message behind them? Well, rotation feels like opportunity to retail, but in reality, it's a warning. The safer trades have already played out. When capital is chasing meme coins and dino coins, you are in the late stages of the cycle. So keep an eye out for these guys. Very, very good metrics. By the way, guys, just a quick side note. When I talk about everything here, this is from my experience. I've cut out hundreds of other stupid indicators that people have told me in the past. Like, this is the most concise information and data points I have found from my own personal experience, and other friends who are very, very talented and good at macro have found. So I'm doing the digging for you. You don't have to go out there and research all of this stuff yourself, okay? This is what I found is the most helpful personally. Sentiment and media frenzy. So mainstream headlines. So when Bitcoin makes front page news and the media begins calling for crazy price targets, it's rarely the start of a new run. It usually means that insiders are unloading into fresh retail demand. The media is brutal, bro. The media is a pawn for large institutions to create exit liquidity for these institutions. Same things with KOLs. KOLs create exit liquidity for the teams. It's a brutal truth. Celebrity and political coins. At cycle peaks, new coins tied to influencers, celebrities, or even politicians dominate headlines. To the untrained eye, it might look like adoption, but in reality, the exit funnels to capture the last wave of liquidity. Look at Trump. Do me a favor. Look at the Trump meme coin, and then look at Solana chart, and just have a look. It marked the perfect top of Solana, and the top of that period in the cycle, okay? Retail anecdotes. Your Uber driver starts talking about meme coins. Family group chats, Discord servers screaming about obscure alts. So these comments repeat every single cycle right before the start of the bear market. If you're aware of it, you'll catch it. Consensus hopium. Narratives like the super cycle or this time is different always return at the top. They justify staying in the market when the risk reward is significantly reduced. So this is a big sign to be wary of. The message behind them, just in general, is that when the noise is the loudest, the opportunity is gone. Media, euphoria, celebrity tokens, and hype retail don't mark the beginning, they mark the end. It's saturation. Crypto is a little bit like a sponge, right? A sponge can only take so much water before the water starts spilling out and becomes saturated. You got to figure out the point at which crypto is max saturated. Who's the last person to buy Bitcoin? The last person to buy crypto is probably your grandma or some taxi driver or a barber. When they start talking about meme coins and altcoins, you should be very worried. Very, very worried. Okay, so survival framework, how to act. We've gone through all of the metrics. We've gone through the hard metrics, which I call the nerdy metrics. MVRV ratio, Puell multiple, reserve risk, SOPR, funding rates, all of this stuff. We've gone through a few of the softer ones. Softer doesn't mean worse, it just means less technical. How do you actually put it together? Well, I'll tell you. You don't chase perfection. No one sells the top. Waiting for a perfect exit is how most traders end up round tripping their gains. You're not going to catch the top, guys. You're going to sell your altcoin, it's going to go another 2x. You're going to have to live with it, okay? That's fine. That's okay. It's going to save you more money in the long run because you want to save that money and you want to put it in the market at an opportune moment, not at the moment when it's the riskiest. Scale out into strength. As more of the signals we've discussed begin flashing red, start reducing exposure. Sell into euphoria while there are still eager buyers. Okay. keep a moon bag. You don't have to exit 100%. Hold a small residual position. Lets you capture any final extension in the market. Rotate into stables, just like I said. Treat stables as ammo, not weakness. Every dollar you preserve near the top is worth multiples when redeployed at the bottom or another opportune moment. Think in cycles, not trades. The goal isn't to nail this move's month, it's to survive and come back armed for the next cycle when the best opportunities appear. Cycles reward the disciplined, not the dreamers. Protect your capital and you'll always be ready for the next opportunity, guys. Have a lovely day. I hope you enjoyed the video. Any questions, leave them down below and I'll catch you guys later. Bye-bye.